All right, putting a little bit of focus right now on the retail sector and how the consumer held up during the holiday shopping season, and more importantly, how they're going to hold up in the year ahead. Joining us right now is Anthony Chukumba. He's a senior research analyst over at Loop Capital Markets. And I feel like 2022 is a year to forget for a lot of folks, at least for a lot of investors. But the consumer held up overall. Now, we know that, of course, the benefits of that didn't sort of extrapolate to all of the retailers out there. I am curious, Anthony, though, who you think might benefit the most into 2023, particularly with the trends, the types of consumer spending trends that we've been seeing.
Sure. We have a very, very murky outlook for 2023, the murkiest in quite some time. There's all these macroeconomic cross currents, right? On the one hand, the employment market is quite strong. Unemployment is 3.7%. You're seeing consistently 5% year over year wage growth. Inflation's coming down. Gas prices are coming down. The supply chain's getting better. But on the other hand, the housing market's falling off a cliff. Consumer confidence is very, very low. And I'm also worried about, with health conditions normalizing, that you're going to see more of a spending shift towards out-of-home experiences as opposed to buying goods. So we are taking a very conservative stance. We like the dollar stores here, particularly Dollar General and Dollar Tree. They will benefit in a murky macroeconomic environment from consumers trading down. We also like, and this is a bit of a riskier pick, Academy Sports and Outdoors. We think that sporting goods are a lot less discretionary than a lot of people might think. And in addition to that, they're becoming a square footage growth story. They just started opening stores again for the first time in a few years last year.
Andrew, I wonder if we can talk about the 2022 holiday season just a bit here. Promotions were widespread, right? I mean, how did those discounts look relative to years past, in your opinion?
So, look, discounts were definitely up relative to last year. But you have to remember, last year, inventory was incredibly tight. So when inventory is incredibly tight, there's just no reason, quite frankly, for retailers to discount. 2020 was very similar. But we think that discounting levels were pretty much in line with 2019. And that was the last year before the pandemic craziness of 2020 and 2021. So we weren't terribly concerned by the increase in discounting year over year.
But some of the discounting that I've seen, and this is just anecdotal, obviously, we've seen a lot more, much more than what we saw in the previous years. And since Christmas and the holiday season has ended, there's been a lot more offers that seem to be offering much steeper percentage discounts than what we saw before. Is there an inventory issue that needs to be worked out here?
So, look, early in 2022, there's no question there was an inventory issue, and you had a lot of large bellwether retailers such as Target and Walmart who were talking about that. But a lot of those inventories got worked down over the course of the year. The other thing that I would say is there's always very aggressive discounting after Christmas, so that's not necessarily something that's surprising from my perspective or concerning.
And let's talk about the health of the U.S. consumer. I mean, we've heard talk of consumers trading down to lower priced goods. I mean, Anthony, are you seeing evidence of this in your world?
Oh, there's no question about it. I mean, just look at, the results that Dollar General and Dollar Tree put up last quarter. I mean, they're certainly benefiting from it. And, it's interesting when you have, high inflation, high gas prices, you are going to see the consumer try to stretch their budget a bit more. And, these dollar stores, so think Dollar General, Family Dollar, they're way lower price relative to supermarkets, convenience stores, drugstores. They even see a little bit of a trade down from Walmart and Target. Not necessarily that they're lower price, but you will see the consumer make a lot more shopping trips closer to need. So smaller shopping trips closer to need. And for those midweek shopping trips, it makes a lot more sense to go to a Dollar General, to go to a Family Dollar, as opposed to lugging you all the way out to the Walmart.
When you look at, I guess, your universe of coverage and just the universe of retail, Anthony, I mean, there was a lot of talk last year about certain retailers who had maybe found a little bit of life because of the pandemic, others that were struggling to sort of make that turnaround, whether it was with new executive leadership or just maybe new strategies here. I'm wondering if you're anticipating any sort of surprises, any sort of companies that, I guess, may sort of rise from the ashes, and maybe some of the companies that have been teetering on the edge, sort of, I guess, falling into that ash heap.
Yeah, that's a great question. I mean, look, two of the companies that we like for 2023, specifically Dollar Tree and Academy Sports, part of the reason we like them is that they do have relatively new management teams who are kind of fixing things that were broken. In Dollar Tree, that's much more the Family Dollar concept. But with Academy Sports, I mean, there was just a lot of, underinvestment for years and years and years that's being fixed by the current CEO. He's been there for a few years at this point. In terms of a company that's teetering and probably going to go over the bridge, I mean, there's one company that comes to mind. It's Bed Bath and Beyond. I think that they're not going to be around a year from now. I mean, they have too much debt. They're irrelevant. And by the way, the housing market, like I said, is falling off a cliff, and that's not going to help them either.
Anthony, talk to us about the overall health of the U.S. consumer. I mean, their resilience, their household balances, for example. What are you seeing this year relative to years past? And does it give you any sense of confidence as we turn the page to the second half of the year when most market practitioners are looking for a rebound?
Yeah, like I said, I mean, it's just really kind of hard to see kind of where the consumer is right now because of, like I said, these cross currents. I mean, certainly seeing, the unemployment rate being so low, particularly with blue collar, employees is a really nice thing to see. Certainly seeing the wage growth is a really nice thing to see. But, like I said, consumer confidence very low, housing market sort of imploding. Now, here's what's sort of interesting. I mean, I think to some extent, the $64,000 question is what happens with the Fed, right? Do we see inflation continue to come down? And if that means that the Fed, stops raising rates or even cuts rates, I think you're going to see retail stocks respond to that before the fundamentals. So it does set up for what could be a really nice rally in retail stocks, not fundamentals, but stock prices in the back half of 2023.
All right, Anthony, going to have to leave it there. Great to catch up with you. Anthony Chukumba there, Senior Research Analyst over at Loop Capital Markets. Don't go anywhere. We'll be back in a moment with what to watch for tomorrow. This is Bloomberg.